Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Friday, September the 24th, 2010, and it's time to look at the markets. Okay, let's start off looking at the Dow Jones Industrial Average. This index was up 197 points today. Big old gap up at the start of the day. Nice rally for the day, which we expected the bulls to put in another kick here, and we're getting that kick now. But it still doesn't change anything in the fact that this is still a bear's market, not a bull's market. I wanted to show you how you know that. I hear a lot of people out there still thinking perhaps this may be a bull market, and there's absolutely no way to see that in the charts. It absolutely is not there. So let's clarify what is and what is not true. Okay, first off, whenever you have a market and you want to analyze what's going on in the true trend, go to your long-term 4-year weekly chart and just have a look at that, because your 4-year weekly chart, whatever signals you're getting there, are going to be stronger than your 6-month daily chart is going to be. So it's important to first know that true trend. Okay, first off, this is 4 years, so let's take into the whole count. Let's give you some history here. Here you are having an uptrend, right? You pull back down here, a little pull back and buy opportunity, and boom, she takes off again, new high. All right, here's your low point. Okay, pulls back down. All right, another low point, higher low. She's still in the uptrend. Higher high, everything's copacetic. Here you go, low point, higher low, everything's copacetic there. Up here, and then boom, broke through right there. This is the low point we had. We just made a new low. All right, that means that you've now shifted from the uptrend that you were in here to a new downtrend here. All right, that shifted right there. Okay, all you needed to see was that low point get taken out, and it was, and then that's it. That means this high point back here is now the line. All right, there's your line. And from that point on, here you go. Down you go. You make this big sell-off here. And once you've broken down, you can trade really short term. You had still lots of move here to the downside. Let me clean that up a little bit. Make sure everybody gets this. All right, so here, your low point was taken out right here. All right, there's your low point. All right, and then you find yourself, you're oversold here on the slow starts. You're going to get bouncing around here and there as people are trying to wonder, hey, what's going on? And is it a bull market? Is it a bear market? No, I don't know. And then the market bounces right here. Oh, look at that big old running river. Each one of these candlesticks is weeks of time, so or is a week of time. So as she continues to go on, more and more people thought, hey, wait, we have ourselves a bull rally here. All you were really doing was setting up the spike right there. Okay, it's like playing a game of volleyball. Someone sets it up so that everybody can spike it. Okay, that's what happened. You had the breakdown, the setup, and the spike. Okay, here we are, current time. Advance here, pull back, series of higher lows. Okay, advance here, pull back, higher low, advance here, pull back, higher low, advance here, break through the low. Oh, game just changed right there. This is now the point the bulls have to take out even to be considering a bull market. All right, you cannot even tell me the trend is your friend. I'm going in favor of the trend. There's none of that. There's no such thing as a bull market. There's nothing as long as this high has not even been taken out. Your low point has been taken out. This is a downtrend. End of story. Okay? You can look at the chart all day long, read it all you want, but that's the simplest, easiest method to look at and say, wait a minute, what are we doing here? We broke down, we've shifted the trend from an uptrend with rising lows to now lows points are going lower, and we're setting up for the what? That's right, the spike. Remember that? There it is. Okay? On a long-term chart, once your slow starch pulls up here above the 80 line, you nail it. All right? When you're in a downtrend, which you are. So there's no ifs, ands, or buts about what direction you should be trading and blah, 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 blah. You also notice on this sell-off back here, let me pull up the right. As we've said a million times, whenever you're looking at price activity, confirm it with the volume, all right? Here we are. You were making those series of lows, higher lows, everybody's happy, we're just making money, and then poof, she falls apart. Check out the volume right here on the sell side. Towering above the previous, okay? There we go. Just completely wipe those guys out, all right? Here you are, right, making a series of there, right there, right there, breaks through that right there. Okay, all this sell-off right here, check out this guy, all right? Right there. Substantiated by the sell volume. All right. Now you've got this bounce right here on weak volume comparative to the sell volume. It's very weak. Okay. Same situation we've seen before. All right. Rally here. Okay. This guy here. All right. See, he was lower than this guy. See, All the signs are telling you the exact same thing. Why some people out there think that this time it's different, they do that every time. It's never different. It's always the same, okay? There's no bull market here. This is a bear market. No matter how you look at the chart, whether you look at the overall trend of the entire 4-year period, whether you look at the short term, like I just showed you, the low points being up here like this, then gets taken out. Okay, now you're getting a bounce, preparing for that spike, and your timing will be used on the slow stotch. All right, now let's zoom in to the 6-month daily chart, because if we're seeing the setup right here as potential short opportunity, when we zoom in, we should find a pretty obvious short opportunity, something with lots of nasty stuff in it, and we already know it's there, but let's go look at it anyway. Okay, here we are looking at the Dow Jones Industrial Average 6-month daily chart. You'll notice you've got a gap here, a gap here, and a gap here today. You can just look at the fact that you had the close of yesterday. Previous close was 10,662. Today's low was 10,664. That leaves you a gap it's going to have to fill. So you've got 1, 2, 3 gaps. And the Dow Jones Industrial Average typically does not get gaps. All right. So people have been trying to argue away the the Nasdaq gaps that keep showing, saying, yeah, the Nasdaq gaps all the time. It's not a big deal. It's always a big deal. You don't just disregard gaps because you don't like them. But for those of you that would try to do that, remember, here you are looking at the Dow Jones Industrial Average, and you have 3 of them right there on the chart that you can't argue, okay? So this is all things telling you this is going to fail. At the same time, you are up here above the slow stotch 80 line, which means you should be looking for short opportunities. That's confirming the long-term chart. When both the long-term and the short-term are in agreement together like they are now, it's an even stronger signal. Also, let's have a look at the RSI. Okay, here we are looking at the RSI indicator. You notice last time she was above the 70 line, or at the 70 line, she was extremely overbought. In hindsight, you know that because that's what happened before the flash crash. Here you are again, 68.34. You already bounced off of the 70 line once. You go up there, I don't care what you do. At this point, you are extremely overbought on this short-term indicator of the 6-month daily chart. So by all accounts, the long term and the short term, the long term being the 4-year weekly and the short term being the 6-month daily, all accounts are telling you the same thing. If you're a bull in this market, you're on the wrong side of the trade, even though you may not think so. It always comes down to not which move is happening, but which one is true and which one is going to be substantiated by volume. And again, today's activity, the entire advance in the market has been on low volume, telling you everything you need to know. Just trust your chart, okay? Pretty simple, pretty easy. Okay, it's Friday. I'm not going to go into all the other charts today. If you want my analysis on the rest of the markets, go back and check out the Thursday's video. Today's market activity is a move to the upside, which we were expecting. One last kick by the bulls. We're getting that. A major gap on the NASDAQ. We're talking like 3/4 of today's move was absolutely just gap, meaning you couldn't even get into it if you wanted to. There's very low volume on the entire trade. For the day, so there's no quality advance here. You still have room to fill an upper gap on the Nasdaq. You can look at that chart, that video I posted on Thursday. We talked about that. There's a little bit of room there to advance higher to fill that, and that's about it. But like I said, look at that long-term chart. That's telltale right there. Okay, that's telling you what's really going on. You are in a downtrend. The trend is your friend if you know what trend to follow. There are trends and there are counter trends. If you're a bull, you're playing a counter trend, which means it's a false advance to the upside. You can get away with it on occasion, but remember, back here, you got burned because the NASDAQ just went, oh yeah, for 3 weeks, and then gap down here, leaving you holding the bag. Back here, you thought you were getting away with it as well, and then flash crash. All right? The chart never lies, but if you don't trust it, you're going to set yourself up for failure, okay? All right, pretty cool, pretty easy. Enjoy your weekend. This is a good weekend, man. It's really nice weather here. If you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free. All we ask in return, please refer a friend. Also, feel free to subscribe to our YouTube channel. We appreciate that support. That helps us stay free. We know a lot of you guys have already done that, referred your friends, shared our videos online, everything like that. We appreciate that exponentially. So here's a quick little look at our disclaimer, and I won't hold you any longer. The disclaimer, read it and weep. God bless, take care, be safe. I'll see you on Monday.